the Bitcoin cycles. So there's a lot of different theories on how the Bitcoin cycles are actually playing out and how they're actually going to play out moving forward. We have our 4-year cycle theory, but there's lots of other theories as well, lots of other ways that things could play out. No one knows the future, obviously, but certainly we can bring in a lot of interesting speculation on where we could be going in the markets. But before we do that, let's have a quick look at this. Bitcoin's dead. It's dead. No, it's not dead. But man, it's been boring recently. I mean, look at how crazy this price action has been. Of course, we're just kind of clinging right on to the 50-day exponential moving average right now for Bitcoin. But if you open up a chart, take a look at it, what are you going to see? Since June 21st, the markets have basically just been sideways. The highest price we've had in the last 2 months, $31,900. Lowest price, $28,500. So the price range has been very small. And the average price for Bitcoin during that time has basically been around $30,000. So we have not deviated very far on either side here for that. Bitcoin's flatlined, going sideways. Welcome to the crab market, everybody. But that boredom is an opportunity, in my opinion, which is why I, of course, continue stacking and all this kind of stuff. Interesting, too. Today, we saw the CPI data coming in, and it didn't really move the needle very much in terms of the market. So actually, the inflation went up. Bitcoin, I guess you could say, is marginally down on the day, but I mean, by a couple $100, nothing serious. So we saw inflation rise from 3% up to 3.2%. This is the first time that inflation has actually gone back up in a while. Of course, we've come down from 9% almost a year ago now. So we have had a definite trend down for inflation, but this little move up could spook markets a little bit. Now, we've seen the S&P 500 index actually correcting since late July. So last 2 weeks, we've seen the S&P 500 correcting down. We've seen NASDAQ correcting as well. There has been some expectation and worry that, of course, inflation was going to go back up. Now, a 3.2% inflation level is really not very much. In fact, the Fed previously has said that, we would probably be okay with 3%. When inflation started going up, they said, well, actually 3% probably fine. 2% is really our target, but 3% is probably good enough. However, a 3.2% inflation level, and of course, more importantly, the fact that it's gone back up a little bit from 3 to 3.2%, I think gives the Federal Reserve the ammunition that they need to raise interest rates one more time. Come on, Jerome Powell. He needs to break something else, and he's trying. If they can kill a few more regional banks, get another 1 million people out of jobs, maybe get the suicide rate up a little bit. It sounds grim, but that's the end reality of what these rate raises mean. It causes a lot of economic pain, or at least that's the intention, is to cause a lot of economic pain, to cool the economy off. But they're pulling the levers of destiny of what happens with the economy, and the money supply and the inflation and all that stuff has real world powerful consequences. It's a scary thing to unleash. Anyway, at least so far, the reaction to the slight rise in inflation hasn't been very much from the markets. So I suppose that's at least a kind of a bit of a positive there. But if we dive into what's going on in Bitcoin land, interesting chart here from Bitcoin Magazine. There are now over 12 million addresses that hold more than 0.1 Bitcoin, which is an encouraging number. I like these small numbers because when I see that, it means just regular people buying Bitcoin. So what's 0.1 BTC today? $295, something like that. There's a lot of people out there who can't afford $1,000 emergency. But there's also a lot of people out there that have $295 worth of Bitcoin. So that's pretty cool. I like that. I know we get excited about the big market moving events, MicroStrategy buying another 10,000 Bitcoin, BlackRock bringing all their trillions. But realistically, this is what gets me more excited about Bitcoin adoption, when we see regular people stacking sats, buying Bitcoin, putting $50 a week in every week or once a month, depending on what people can afford. People are investing in their future economic prosperity by dollar cost averaging long-term in a Bitcoin. It's all going to make a lot more sense when Bitcoin is worth hundreds of thousands of dollars per coin, $1 million perhaps per coin one day. Then we'll all look back on these times and go, wow, I'm glad I didn't give up stacking. I'm glad I kept moving forward intentionally, investing in my future. Because a lot of people give up. A lot of people give up when the markets are rough. That's why it's so quiet right now. Everybody's gone away. The tourists have left. The tourists that overstayed also left. The tourists that had to be picked up off the beach and thrown out of town, they also left. We're the last of us. Although, of course, surprisingly, we see very high on-chain activity. On-chain summer happening right now over on Coinbase's base and BYBIT's mantle and all these kind of things. In fact, I think I used 6. I used 6 Ethereum layer 2s this week. It's been pretty nuts. Playing around on all kinds of things, trying new chains, seeing which ones are cheaper, seeing which ones are faster, seeing where applications are launching on these different chains. It was fun. It was fun, of course, chasing the potential future airdrops. But that's the thing. If you haven't given up, if you're here right now, and this stat that I shared with you, 12 million addresses holding more than 0.1 PTC, and that's a number, by the way, that has grown from 8 million in 2020 to 12 million in 2023. So that's up basically over 1 million addresses per year being added right now. So that's great. People are here. People are paying attention, even though like the herd's not here, the mania is not here. If you're here, if you're paying attention, you're finding the opportunities right now, you're not giving up. I think the ball's in your court, to be honest, in terms of making it. Now, before we get into the Bitcoin cycle theory stuff, if you are a trader, you need yourself an account over on BYBIT. It is the best place to be doing trading. If you want to trade futures, they got it. They got Bitcoin, Ethereum, all the top coins, Polygon, Cardano, all that fun stuff. Great spot altcoin markets as well, whether it's, again, the top altcoins or more exotic stuff on here also. They have popular copy trading services. And if you use the link down below in the description, you'll be eligible to get up to $30,000 in trading and deposit bonuses, as well as exclusive fee discounts. So if you are a cryptocurrency trader, then check it out. Now let's get into this. This is from Cryptocon. I think this is really some great charts that he laid out here. So I'm just going to take myself on the screen so we can just see these charts a little better here. I'm going to walk you through these charts here, the ideas behind these charts here. And of course, go and give Cryptocon a follow over here on Twitter if you haven't already, at Cryptocon_. Very, very interesting ideas here, though. So this is looking at all the different theories, or some of the most popular theories right now, we should say, that we're seeing in the market, and what those would look like and what might actually play out and what may or may not be true. That's interesting. So there's the 4-year cycle theory. So the 4-year cycle theory, that basically means that every 4 years, things kind of repeat essentially in the markets. They don't repeat exactly. We have rhymes though, right? History never repeats, but it often does rhyme. And that's based around the Bitcoin halving cycles. Next Bitcoin halving is April next year. Now, based on this theory, we tend to see new market tops come in around 12 to 18 months on average after the Bitcoin halving. So in this scenario, potentially we see Bitcoin get up to like 130, 150, maybe even as high as 180K at the absolute peak blow off top in sometime. Cryptocon, this analyst here, he's saying, well, maybe we're going to see that November 2025, for example. But that could happen as soon as early 2025. We don't know exactly when that's going to come in. But then, and this is pretty interesting, there is the Elliott Impulse Wave 5 early top group. Now, this is a pretty interesting theory. So this group of people believe that either this cycle is different or institutionally driven. Many also think that the last cycle has not yet completed, which is a very fascinating idea. Basically, a 69K was not the top for this cycle. Potentially a crazy idea, but I'm open to listening to crazy ideas. Why not? Many also think that the last cycle, because there was no blow off top in the last cycle, and cites that cycles are lengthening. So cycles are getting longer. The nature of cycles is changing. The 4-year theory is basically too simplistic, is part of the argument here, I would say. The 4-year theory is too simplistic. The 4-year theory will be broken. And I think the 4-year cycle theory will definitely be broken, although I think we're still very much linked to larger term credit cycles, larger term market cycles, like the real estate cycles and all this kind of stuff. That's all still part of the equation when it comes down to it. So there's that to keep in mind. And at some point, that Bitcoin 4-year cycle theory of, well, the miners, they get the halving and they have less Bitcoin to sell. It's just not going to matter at some point. The demand is just going to so dramatically outstrip any possible supply that the miners can bring to the market that it's not necessarily going to matter that much. And I would say my thought is that by the end of this decade, maybe this Bitcoin halving is still going to be pretty important, but the next one, really not that important. I think about it, it's going to go from 450 Bitcoin a day down to 225. And the market cap's over at $10 trillion or something by that point. It's not going to be a big deal. Anyway, so this Elliott Wave group, they project a 5th and final wave for the cycle that would conclude this year or early next year with a powerful parabolic top. Basically, you have some analysts out there who are predicting right now that we're at a stage in the market where we are about to see things go absolutely nuts. Now, that could be because of the Bitcoin ETF hype. Remember, our next Bitcoin ETF approval or denial, when the SEC has to make a decision, is actually just in 3 days. So I think Monday, the SEC has to say, well, we're either going to approve, deny, or delay the ARK Bitcoin ETF application. Probably going to be delayed, that's my opinion. But maybe in September or October, we start getting Bitcoin ETF approvals. BlackRock's first, others follow shortly thereafter. That creates the hype, the mania, the buy pressure that pushes the price up. And remember, they don't launch straight away. So we might see 4, 6, 8 weeks before those Bitcoin ETF products actually hit the market from the time they're approved to the time that they launch. That would probably be the most spectacular run up there. Maybe a bunch of money does enter shortly thereafter, running into the Bitcoin halving. That's also great narrative bait. So we see this cycle top come in and break basically all of our existing models. Well, I guess it wouldn't break the Elliott wave theory, would it? It would follow right along with it. But otherwise, it would break the Bitcoin 4-year model. Now, that's pretty interesting. That's pretty interesting when you start to think about it. So that would essentially get us up to maybe 90, maybe $100,000 by the end of this year, or maybe like January, February next year, based on all the ETF hype and the halving hype and all this stuff. We get this giant buy the rumor, sell the news event, like Coinbase launching, buy the rumor, sell the news, April 2021. El Salvador Bitcoin legal tender, buy the rumor, sell the news, November 2021. Massive market corrections after both those events. Bitcoin ETF could be a similar situation with a massive buy the rumor, sell the news coming in. Yeah, it's a very interesting theory. Now, this analyst goes a bit farther and says, well, what if they're kind of both right? What if we do get that model essentially being kind of broken? We have a massive rally actually come in. We do get up to 90K, followed by a mid-cycle bear market. So this would essentially be going back and saying, well, let's pay attention to an extent to what happened in 2019, where we had a massive rally. Now, this prediction, this analyst, this thought process here behind the Elliott Wave guys sees a new high price. 2019, we didn't get a new high price. We came in 30% below the previous all-time high, which is what I've been saying. I base my 48K prediction on. Massive area of price resistance, massively important area of price for Bitcoin. So maybe we get up to 48K before the Bitcoin halving, potentially a correction shortly before the Bitcoin halving. But this Elliott Wave theory here would say, okay, no, we're actually going to break that. We're going to get a new all-time high before the Bitcoin halving. And then this analyst, Cryptocon, sees the potential for a mid-cycle bear market. So think about that, late 2024, early 2025, markets go from 90K back down to like 30K. It would be what nobody expects. And markets do have a way of throwing the unexpected at us. But this would be essentially what nobody ends up expecting. And then we continue into 2025 for our new 4-year cycle peak blow off. Interesting theory. Interesting theory for sure. Now, the Elliott wave theorists are running the clock down here. They don't have a lot of time left to see their theory proven right. 6 months at the max, I would say, before it becomes a semi-irrelevant hypothesis. But it is an interesting hypothesis. And I've seen a lot of people talking about this very passionately. And I'm not sure that I agree with it, although I think Bitcoin ETF hype is a real wild card that could potentially cause some dramatic price movements, but it depends on when it happens. See, this Elliott wave move, I would say, is predicated on a Bitcoin ETF because you need a spark. The markets are dead, as we discussed. You need a spark to get the markets going. So this would be predicated on the idea that we get that spark. The Bitcoin ETF is that spark. The halving narrative is probably not strong enough this far out, but the Bitcoin ETF is the spark. It pushes the markets up to break previous cycles. We get a new high and a correction afterwards, and everybody realizes actually, yeah, it's bullish, but it's not going to dramatically change things overnight until the real buy pressure starts coming in as people slowly enter their money into these products, et cetera, et cetera. And then this analyst calling for the real bull market, 130K back down to 30K, baby. There's going to be tears when that happens. Holy cow. But then again, Bitcoin does tend to correct 75% during a bear market. Now, some might argue, well, Bitcoin ETF is going to change that. Probably not. I think people who buy Bitcoin, any ETFs at the top are going to be any less panic sellers than everybody else who buys Bitcoin. No, be the same stuff, same human emotions playing out. And maybe we get up to 180K and then a 75% correction takes us down to 50K. Interesting. Now, what's also interesting, of course, is the correlation between Bitcoin and the US dollar cycles. So that's also another thing to bring into play here. It's where are we at when it comes to the correlation between the supply of dollars, the strength of the dollar? We tend to see when the dollar is weaker, Bitcoin tends to have rallies. Now, that was true back in 2012. That was true back in 2013. That was true to an extent in late 2017. That was true in 2021. And it could be becoming true again very soon as the dollar has been showing a lot of weakness recently. So the question becomes is what are we actually tied to? Or are we just tied to multiple things? We're tied to the dollar, we're tied to the 4-year cycle, or the Elliott wave guys, they can get their opinions in there too. Why the heck not? There's certainly a lot going on that gives us food for thought here in the markets. Cryptocon also points out some other interesting indicators. For example, the crypto, the vigor signal, which is an interesting one. But that is showing once again that we could be nearing a moment for a large market rally according to how this indicator works. So that's an interesting thought. There's lots of course, charts that we can share that end up being kind of like that. And he even points out the November 28th cycle theory. Now, this is a pretty interesting one. Basically, the idea is that every 4 years, Bitcoin tops within a month on either side of November 28th. Now, that, of course, is a very curious theory because can you really certainly say that, well, it's going to do that? Of course, he's not saying certainly. It's just a theory, right? But if you look at a theory that, well, our first cycle top came November 28th back in 2012, and then every 4 years thereafter, we've been having these cycle tops around November 28th. In 2017, our top came December 18th. In 2021, our top came November 1st, or no, like November 7th or 8th, something like that. So it's interesting. That would tie back in, of course, to the Bitcoin 4-year cycles, at least to an extent. I don't know which of these theories is going to be correct. It's certainly interesting food for thought. Nobody can predict the future. We can all have our models. We can all have our theories. And I think for you as the one listening to this conversation, it's important for you to have all the information possible. So if you do see Bitcoin go parabolic by the end of the year and you see us get to up to 100K or something like that on Bitcoin ETF hype, you can look back and think, is this a danger sign? Is this hype going to be sustainable? Et cetera, et cetera. Knowledge is power, of course.